Well, hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, it's a brand new week and we will be analyzing the cues for trade in today's session. We'll also be analyzing the impact of the StT hike on futures and options contract with 5Paisa CEO Prakash Gagdani later on the show. And we'll also be addressing your stock-related queries with our technical expert Rajesh Palviya of Axis Securities. So if you have any queries, do send them in to us on our live feed and we'll have them addressed by our expert. But before we do all that, let's take a look at the top headlines at this hour. Well, Wall Street ended higher on Friday in a volatile session despite concerns over the ongoing banking crisis. Shares of another European bank, Deutsche Bank, slumped following a spike in credit default swaps, sparking a sell-off in European markets. Asian markets trade mixed as investors remain cautious over the health of the banking sector in Europe and the US. The SGX Nifty, however, is indicating a gap-up open for the Indian markets. And government hikes securities transaction tax on futures and options by 25%. Tax on options hiked from 5,000 rupees for every 1 crore in turnover to 6,250 rupees. Let's now get on board Prakash Gagdani, who's the CEO of 5paisa.com, to discuss how the StT hike will impact trading in futures and options. Good morning, Prakash. Good to have you on the show. Government's StT hike has come as a big shocker and 25% hike is quite steep. So what are your initial thoughts and how big a hit would it be for a brokerage such as yours?
First of all, very good morning and thank you for having me on your show. Yeah, it actually came as a surprise because it was not a part of the first initial budget proposal, but it came at the last minute. But I think the reason why I feel this is increased, obviously, the exchange turnover and options have gone up significantly, and if you only look at the actual turnover value, which is premium into quantity in option trading, it has surpassed the cash market turnover. So there is, and I think the move could be for two reasons. One is because of the volume increase, the revenue to the government by increasing the StT will go up. And secondly is also to curb the volumes which have actually gone up 3 to 4x. It is in a way to dissuade normally small-time investors who do not understand option to be away from options trading by increasing the cost a bit. But my take is that you have sellers of the option and you have buyers of the option. Now, in sellers of the option, I don't see much of an impact because they come with a large capital. For example, if you want to trade for one lot, you need at least 75 to 80,000 rupees. So the charge of 5,000, though it looks like 6,250 rupees on a crore, but typically on the premium, that the normally amount is very less. So for seller of the option, I don't see a significant impact. On the buyer of the option, because they're coming with a lesser capital, any cost, which is brokerage, StT, and then you have transaction charges levied by exchange, stamp duty, all put together, has an impact on buyer of an option. So I think if you are a small trader, then yes, there is an impact. But if you are a seller of the option and trader, I don't see much of an impact in terms of the volumes. As far as people are trading and they're decently making money, I don't see the charges hitting or pinching it much.
Right. You don't see the charges hitting, traders much, at least in the, long term. But, what about high frequency traders? These HFTs play for very little returns and the hike in StT will only increase their cost as well. HFTs will bear the maximum brunt. But what about retail and small traders? How much of a setback would it be for them? Because, in the F&O segment, the number of retail investors touched 3.2 million in January this year. This number is set to fall in that case.
So definitely, I mean, there would be an impact. As I said, there would be definitely an impact on small traders. And the number of traders on the derivative side has gone up. And we know that most of the customers, almost 60-65% of the customers are buyer of the options first and seller of the option later. So if you're a buyer of the option, obviously you come with a lesser capital, 10,000, 15,000 rupee. And in that, anyways, the probability of people making losses are higher. And then you add the charges and the cost. So definitely there is an impact. On the HFT side, people who are traders, they will have to somewhere factor this cost in their entire calculation, and it will impact a bit of trading, but marginally. But I think on the buyer of the options, small time traders, definitely there is going to be an impact. But we'll have to see what that impact is and how it pans out in next couple of months. Because it is not just this, there are a couple of more regulations which is going out from April 1st. So all put together, there might be an impact on the trading volumes.
Right. A couple of days ago, NSE had in fact announced that it will scrap the do not exercise facility for stock options, right? Tell us more about what you feel on that front.
So this facility was basically given, and especially which happened, there was a case happened, I think in HPCL, where on the last day of expiry, suddenly the out of the money option went in the money, and traders had to bear loss, brokers had to bear losses. So I think it was post that this facility had started. I think with that facility getting scrapped, there would be an impact, not much on the customers, but on the RMS policies of the broker. So even now, despite do not exercise facility being there, we right from the last week of the expiry, we start calling up customers, we start doing communications. Obviously, the margins increase to a very large extent, so we also square off. Now, the only thing what will increase is the more risk management adherence at our end as brokers, because we'll have to ensure that especially people who are sellers, where if they do not square off, it will lead to auction, and if they do not have the equivalent quantity in the cash market, either intraday or overnight holdings. So there would be an additional cost to us and also risk to us if we are not able to square off the position. It will go into compulsory delivery and might result into auction if it is selling. So definitely that's a negative for us. But we've been following that risk management, and I'm sure we would be able to continue that unless something unforeseen happen the way it happened in HPCL HPCL, or I think Hindalco, I don't remember exactly, but yeah, either of these stock it had happened. So unfortunately, if that happens, then obviously there will be a more risk. But we've been working on how do we work on this entire structure in terms of risk management.
Right, Prakash, NSE has also rolled back 6% transaction hike for equities and F&O trades. How much of a relief would that turn out to be in light of the StT hike that we've seen?
I think it's a good relief, because it would be a double whammy for customers, where the StT also is going up and transaction charges are going up. See, despite all the cost escalations that have happened to brokers in last 2 years, brokers have not increased the brokerage rates. But government has gone up and increased the StT. Exchanges were supposed to increase the transaction charge. So I think everyone is feeling the pinch of the costs they're bearing. But it is a good thing that because of StT rise, exchanges decided to roll back. So I think it is some relief. But that was anyways 5% kind of increase. But that's at least some relief to traders.
Right. Lastly, do you think this StT hike, would force some of these foreign investors to, shift base to India, given the fact that they cannot really claim treaty benefits now? So, they can adjust the StT against their tax outgo in that sense.
No, definitely. First of all, I'm not a subject matter expert on the FPI side, because I predominantly work on retail. But yes, there would be definitely an impact for FPIs as well.
Right, Prakash. Thanks a lot for taking out time and joining in this morning and putting things into perspective for us.
Thank you. Thank you very much.
Thank you. Well, let's also get on board then Rajesh Palviya of Axis Securities to discuss the technical side of the market. But Rajesh, your first thoughts on the StT hike that was announced on Friday? A bolt out of the blue. None of these proposals were heard of during the budget.
Good morning, Nandita. Yeah, it was surprise in the amendment bill of this budget, and StT hike is really going to hurt the high frequency trader as well as the retail trader also, because now all high frequency trader, those who are deploying their capital through algo trades, they have to pick all the strategies, because again, this cost is going to take hit on their profits, and they have to adjust all their strategies, and it's going to give a cost impact to all their profits. for retail trader again, because especially in last 2 years we have seen significant jump in the retail participation in option trading, and this kind of hike in STT is going to give impact to their trades also. So that will give impact in the market as well as near term as well as on the short term also. Some of the retailers, some of the high frequency trader may reduce their volumes in the market, because this cost is also a factor while defining their all trading strategy. So especially buying and selling of option, both are going to have hit by this STT hike. So that will give an impact to the volumes also in the market. So let's see how this happens in the coming month. But definitely it's going to cut down the volumes from the exchanges. That's the impact which we can visualize at the current level.
Right. So it will be impacting HFTs as well as retail traders. Let's also talk about the Nifty. Well, we did see a sell-off come in amid confusion over the StT hike on Friday. But this morning, SGX Nifty is giving extremely positive signals, hint of a gap-up start. Do you think even if we manage to reclaim that 17,000 mark, we'll be able to sustain it throughout the rest of the day?
So, Anita, since last couple of trading sessions, Nifty's managed to hold 16,900 level on the closing basis, and Nifty is holding above those levels. So, which clearly gives us sign that if we don't go below 16,900 in today's session or in next 2-3 sessions, then possibly again Nifty will attempt to give some pullback from the current level. Though on the higher side, 17,150 to 17,200 is the steep resistance for the Nifty as of now, because most of the call writers for this March series have sold their call options for 17,200 strike, and which is likely to act as a major resistance area for any kind of pullback action if we see for this March expiry. If at all Nifty manages to cross above 17,200, then it's going to be very interesting to see before this expiry. And if that happens, then one round of major short covering action we can see in the market. But that looks unlikely, because to cross 17,200 it requires some positive news flow. Then only we are going to cross this 17,200 at this current juncture. On the other hand, if it breaks below 16,900, then possibly Nifty can go down further towards 16,800. Even it may break 16,800 level also, because overall structure is weak. The only positive factor is at this level is that we are in oversold zone, and the risk to reward is not in favor of shorter at this current level. So everybody will wait for some pullback action again to initiate the short position also in the market. So some pullback action can be there in today's session. 17,100, 150 could be the zone where again one can initiate short, because the structure for the market is sell on rise. Our stop loss is on the higher side to go short at around 17,250. So at this level, we will wait for some pullback around 17,200. Then we will initiate the short.
Right. So those are the levels to watch out for on the Nifty today. But what about the bank Nifty? We also have a couple of queries coming in on SBI and IndusInd Bank. Naveen wants to know your thoughts on SBI, and for IndusInd Bank, Pramod has written in and he wants your thoughts. So let's talk about Nifty Bank as to where the support levels are currently, and about these two counters as well. Rajesh.
So Bank Nifty is also holding the ground, and 39,000 is the key level on the downside. Similar to Nifty, Nifty is holding 16,900 and Bank Nifty is holding 39,000 level on a closing basis since last couple of trading session. So which is going to be very important and crucial level as of now for Bank Nifty. If he breaks below those levels, then possibly Bank Nifty can again witness some more supply pressure, and 38,500 could be the next target. Though looking at the derivative setup, 39,000 put writers are having a strong base around those levels. So in today's session as well as in next 2 or 3 trading sessions, this level needs to watch closely. If he breaks those levels, then this down move can continue. Though Bank Nifty is also in oversold trajectory, most of the Bank Nifty components are also in oversold trajectory. So some pullback action we can expect in the Bank Nifty also. But again, on the higher side, 39,600 to 700 are the key level on the higher side. If at all we crosses above 39,600 level, then some short covering action we can see in the market, and on the higher side, Bank Nifty can scale up further higher towards 39,800 to 40,000 level. But looking at the overall setup, 40,000 is likely to act as a major hurdle for any kind of pullback action in the near-term basis. So sell on rise is the strategy again in the Bank Nifty, but not at the current level. Wait for some pullback action towards 39,700 to 800 zone. Keep your stop losses at around 40,000 level. Until the Bank Nifty not crosses above 40,000 level, sell on rise would be the strategy for Bank Nifty also. Now moving to the banking stocks, as you mentioned, like SBI, structure is weak. SBI has given a breakdown of its multiple support area of 515. Now, if it's 515 is the challenging level for today's session, if SBI manages to cross above 515, then some short covering we can see in the bank SBI. And on the higher side, again, 525 to 530 could be the resistance area on the higher side. So overall, the structure for SBI is weak. Sell on rise is the strategy until the SBI not crosses above 530 level on the weekly closing basis. On the downside, if it's remain below 515, then possible downside target for SBI could be around 502 to 495. Another stock, as you mentioned, IndusInd Bank. Again, the structure for IndusInd Bank is also weak. Stock is trading below to all its important moving averages. Till stock is trading below 1050, 1060 level. Sell on price is the structure. Only short covering action will trigger about 1060 level only. If stocks breaks below 1000 level, then it may continue its downtrend, and possibly on the downside 970 could be the near-term target. So again, structure is weak. Sell on rise is the strategy till stock is trading below 1060 level.
Right, let's also talk about Sun Pharma. That's the stock of the day for me because there's a lot of news flow surrounding this company. There's been an IT security incident at the company's premises, and that has impacted some businesses. And the company will be incurring expenses in connection with it and also for its remediation. There's also another bit of news that the company has acquired 60% stake in Vivaldis Health. And, Credit Suisse has updated the counter to outperform and sees, the margins hitting 30% by FY25. Sun Pharma, from the pharma basket, what are your thoughts on this counter?
So since last couple of weeks, we are seeing, sustained selling pressure in the stock, but stock has formed a bottom on the near-term chart at around 940 level, and stock is holding the ground around 200-day moving average, which was at around 940 level also. So looking at the overall setup, 940 is the crucial level for Sun Pharma on the downside. If stocks breaks those levels, then we can see the continuation of this downtrend. Some recovery is happening since last couple of trading session. So in today's session, 965 level is very important and crucial to watch. If stocks holds these level, then some pullback we can expect in the Sun Pharma towards 1000 level on the higher side. Overall structure for Sun Pharma is on the bearish side. 940 and 965, these two levels are very important on the downside. If at all stocks hold those levels, then some recovery trade we can see towards 1000 level. But 1000 is a crucial level for the Sun Pharma on the higher side. Those who are holding the position, they can book some profits around 1000 level.
Right, let's also talk about Phoenix Mills. There's a brokerage call on the stock. Morgan Stanley has in fact initiated coverage on the stock with an overweight call with a target of 1700 rupees a share. In fact, it believes that the company is well poised to benefit from India's consumption story, and it is in expansion phase and plans to double its rental portfolio in the next 3 to 4 years. Looking at the stock, it has lost somewhere around 10% on a YTD basis. But do you expect it to expect the charts to hint at some bit of upside from here? Would it be prudent to buy into this counter now?
So since November 2022, we are seeing that stock is in downtrend and stock is in correction mode. Stock is forming lower top, lower bottom formation on the daily chart. Looking at the short to medium term setup or long term setup is bullish, but short to medium term setup is still weak. Looking at the recovery in recent past, now stock is negotiating with its 200-day as well as its 50-day moving average. If at all stock crosses about 1350, 60 zone in this recovery, then possibly some buying interest can be there in the stock and some recovery trade can continue further. So 1350, 1360 are the key level for this recovery. If at all stock crosses those levels, then possibly stock can inch up further higher towards 1450 to 1500 zone also. But a lot of hurdles in this recovery. So first hurdle is at 1350. So those who are buying, those who are holding the position from lower level, they can book some partial profit around 1350. As overall structure for stock is still weak. Structure will change on the buying side above 1450 level.
Right, so those are the levels to watch out on Phoenix Mills. We have a couple of queries coming in on LIC. Gurmeet Singh wants to know your thoughts on this counter for the next 6 months. And we also have Nitin writing in and wanting to know your thoughts. Now, since the start of the year, the company, in fact, has shaved off somewhere around 20%. And of course, the entire Adani exposure also, putting the spotlight on the firm. Would you expect investors to buy into it, given the fact that the noise around the Adani group of shares has actually, is around settling down right now?
So yes, definitely direct impact of Adani Group stock is there clearly visible on the LIC stock also. And LIC continuously in downtrends. Even if we analyze on the weekly chart, stock is traveling in down sloping channel. And there is no as such substantial recovery we have seen in the stock till now. So post-IPO stock is continuously in downtrend, series of lower top, lower bottom formation on the daily chart. Looking at the overall structure, structure is weak. Stock is trading below to all its near-term, short-term moving averages. So we believe that, even if any recovery trades comes in the stock, 600 is the key hurdle for the stock for any kind of recovery in the near term or on the short term. So sell on rise is the strategy. If stocks breaks below 555 level, then it will resume its downtrend and possibly stock may take further hit towards 530, 520 level also. So overall structure is weak for LIC. So my advice would be to avoid at this level for buying in this stock, as the overall structure for stock is on the weak side. The trend will change only above 600 level. If it's hold above 600 level on a weekly closing basis, then only one should try to buy this stock for some gain on the near term to short term.
Right, so sell on rise is the strategy that one should adopt on LIC. A last query I would like to take up on the oil and gas sector. A couple of queries coming on Reliance Industries and ONGC as well as IOC. Which of the three look good for investment right now?
So Reliance, again, witnessing the supply pressure, we have seen some pullback action towards 2300 level, but the steep resistance is there around 2300, 2320 level. For these series, these levels are likely to act as a major hurdle because a lot of call writing activity is there for Reliance Industry at 2300 strike. So that's going to act as a resistance for near-term trend. For Reliance Industry, the major hurdle on the technical side, that is 2340. If stocks crosses those levels, then only some short covering we can see in the stock towards 2400 level. But looking at the overall structure, we believe that some more supply pressure is going to be there in the stock around those level on the high side. So those who wants to buy the stock, wait for some recovery about 2340, then only you can buy for trading perspective. On the other hand, if stocks breaks below 2320 level, then possibly it will revisit its lower level of 2180. That is the 1 year support area. So as this moment, don't buy stock. Wait for some recovery about 2340, then only one should buy. If we analyze the structure for IOC, stock is trying to hold 74, 75 level, which is the multiple support area on the weekly chart. So if stocks continues to hold above 75 level, then some recovery trade we can see in the IOC. But again, on the higher side, 82 is the key hurdle. If stocks crosses above 82 level, then this stock can exhibit some further more upside tick towards 88 level. So IOC is traveling in up sloping channel on the weekly chart. So it looks positive. Keep stop loss of 74 if you are buying IOC at the current level or already holding the position.
Right. Rajesh, we're completely running out of time on this episode of Morning Trade. But before I let you go, leave us with some of your top stock recommendations for viewers.
So one stock is from FMCG, that is Kolpal. Kolpal is looking attractive. Stock managed to give breakout of its consolidation zone. So looking at the setup, we believe that Kolpal can extend its up move towards 1580, 1590 zone. One can buy and accumulate this stock with stop loss of 1485. Another stock on the buying side from the pharma space, that is Aurobindo Pharma. If we analyze the overall setup for the Aurobindo Pharma, stock was traveling in down sloping channel on the weekly chart, and stock managed to give breakout of that down sloping channel. And looking at the near term setup, stock now trading above its 100-day and 50-day moving average, which also adding up the bullishness. So Aurobindo Pharma can be a buy for upside target of 520, 525. One can keep stop loss of 470. And third stock on the buying side, that is Titan. Titan is also looking positive, and the stock is now trading above its 100-day moving average. Looking at the near-term setup, we believe that Titan can exhibit further more bullishness from the current level. 2580 could be the target on the short to medium-term basis. One can buy and accumulate Titan with stop loss of 2460.
Right, so those are the 3 recommendations coming in from Rajesh this morning. Well, with that, Rajesh, thanks a lot for taking out time and joining us this morning and addressing all of your queries as well. Well, with that, it's a wrap on this edition of Morning Trade, but don't go anywhere because coming up next is Opening Bell.